for bankers. So if we talk about AFB, we have started with our series regarding AFB quite a few weeks back, and I'm still continuing with it. Every single time I'm coming with around 10 MCQs for you to deal with in terms of AFB. So let's quickly move on and talk about it. Okay. At this point of time, if you haven't subscribed to our channel yet, kindly go ahead and do it. And at the same time, you can also find every detail of AFB on our app as well. So what you can do is you can check out our app for various other features. So let's understand. If you haven't downloaded the app yet, then you should definitely do that, because there you get all the details regarding all the classes, study plans, the details of every examination, notifications, and many more things. So let's move on. Okay, so this is, if you haven't subscribed to our channel yet, kindly go ahead and subscribe it on Officers Adda 24/7. Okay, so now when we talk about the topic, let's begin with the questions there. This is the first question for the day. When outflow of economic sources to settle an obligation is not probable, or the amount expected to be paid and to settle the liability cannot be measured with sufficient reliability. Sometimes it's not possible to find out whether the liability that we can see is certain or uncertain. Now this position is something which we have no control on, and at the same time we do not know how that particular liability will turn out to be, whether it would even exist or not. Now the point is, what would this be called? Will it be called a provision? Okay. Will it be called a provision, or a contingent liability, or a secured loan, or an unsecured loan? When there is the point of uncertainty, right? In this case, we have uncertainty. When we have the point of uncertainty, this particular topic would go towards the area of contingent liability, a liability which may or may not arise in the upcoming future. That's what we call a contingent liability. Now, moving on to the next question. The correct answer is B, and this is the definition for contingent liability. A contingent liability is a liability that may occur depending on the outcome of an uncertain event in the future, and a contingent liability is recorded. See, whenever we find a contingent liability, since it is not certain that it would occur in the near future, so we cannot note it down as a liability in the balance sheet. So it will not go in the balance sheet. Basically, it would be taken only and only under the balance sheet, that too as a footnote. It has no specific value. It would be just a footnote, right? So now let's move on to the question number 2. Question number 2 says that goods worth rupees 2000 were distributed as free samples in the market. The journal entry will be, if we have distributed the goods as free samples, so what would you do in this case? Whether it would be drawings account debited to purchases, or sales account debited to cash, or advertisement to purchases, or no entry. When we talk about this area, when there are certain goods worth rupees 2000 which are distributed as free samples, that means we are not getting anything, right? We have just given something to someone else. That means we are considering, we are having an advertising expense, right? It's an advertising expenditure that we have incurred, and we are not losing cash. Are we? No, we are not losing cash. We are losing what? We are losing the goods we have purchased, and we are not paying for it. We are not getting paid for it, rather. See, the point is, we have purchased goods, we thought that we will be selling it, but we are not selling it here. We have just kept it in the books of accounts, and what happened is, I purchased this particular good, and now what is happening? Now I am giving it away so that I can have what? I can have a particular advertising scenario, right? So in this case, what will happen is, we are giving it to someone else so that it brings more sale in the upcoming future. So when such a thing happens, this particular thing would be taken as advertising expenditure to purchases. We are losing purchases, and advertising expense on the debit side is noted as all the expenses are normally debited in the books of accounts. Right? So that's what we'll be talking about. Moving on to the question number 3. If the trial balance is prepared as per the balance method, and then which part of the ledger is taken to it? Listen to the question carefully. Trial balance is prepared as per the balance method. There are 3 methods in terms of formulating a trial balance. Number 1 is where we take the total method. Second one is taken in terms of the first method is total. What we do is we just total the debits and the credit sides, and we note down both of them in the trial balance here. That's the method number 1. Method number 2 is when we take out the carried down or the brought down in this scenario. Whatever the brought down or the carried down would be, we'll be considering that particular amount. For the third one, which is basically total and balance method together, it is basically taken where we have 2 parts for the balance method and we have 2 parts for the total method. So this is the second method that we use. This is the actually third one. This is number 1. This is for the balance. Number 2. This is for the total. Whatever the total would be, we'll consider that total and take it to the trial balance. Second one would be from every ledger we'll find out the balancing figure and we'll take that balancing figure only. So that is point number 2. Third one is a component where both of these are done. That means we'll making 4 columns, each for 2 for debit and 2 for credit, corresponding to the fact this is a balance method, this is the total method. Now the question says you are using the balance method, in which part of the ledger is taken to it. Closing balance of the ledger is taken, or the opening balance is taken, or the difference between the closing and the opening is taken, or total of both the balances is taken. When we are talking about balance method, we take out the closing balances first and use those closing balances for our trial balance. So in this case, the correct answer would be, that is A. The closing balance would be used here for the calculations. That means in this case, what will we do? Let's talk about that. In terms of the process, what we do here is, in this case, if this is a ledger, say this is of cash. See, this is for cash. We have noted down to balance brought down. This was the value for to balance brought down, and this was the value for by balance carried down. Right? Balance brought down and balance carried down is already noted. So now this is area of for the carried down, isn't it? Now this carried down will be taken to the trial balance, and where this is where, see, this particular balance here, the debit is so much, the value of debit is more than that of the credit side. That is why the balancing figure is shown on the credit side. So this means that the debit side is more. So this particular balance, even if it is shown on the credit side, it would be still called a debit balance. So if I am preparing the trial balance, here on the debit side, it would be shown on the cash and it would be shown as a debit balance. And in terms of balance, what we have taken, the closing balance of that particular aspect or the topic that we have taken up, the name of the ledger. The ledger would be shown here, and the balance which is shown on the credit side will be shown on the debit side, considering the fact that the debit side was way more than that of credit side, ultimately leading to the fact that in order to match both the debits and the credit, we had shown the balancing figure on the credit side. So even though it comes on the credit side, it's still called a debit balance. That's the rule for the trial balance. Right? So this is question number 3. Let's move on to question number 4. There's a particular company which purchased a building for rupees 12 lakh, out of which 2 lakh were paid in cash. Out of this, 2 lakh had been paid in cash, and the balance amount was paid by issue of equity shares. Now the company has done 2 things, that it has purchased a particular building for 12 lakh. Right? From 12 lakh, it has already given 2 lakh. After the payment of that 2 lakh, it is still left with 10 lakhs, and the balance amount was paid by issue of equity shares. Now they are issuing equity shares for this, each at a premium of 25%. That means the value of these shares would be, how many shares will be issued by the company? Will it be 1,80,000, 1,20,000 or 96,000? The company purchased a building worth rupees 12 lakh. It has given 2 lakh. It's still left with 10 lakh rupees. And they're saying that what if I give you a particular amount of shares of the company, because we do not have enough money to pay you. So they said, okay, if this is a scenario, then this is cool with us. So if this is what the company and the vendor are dealing with, what will we do? Each and every share will not be of 10 now. 10 rupees is the face value. They are giving it at a premium of 2.5%. That makes it 12.5 rupees per share, isn't it? This comes out to be 12.5 rupees per share. So for every share you are giving more. So in this case, what will happen? It will turn out to be 80,000 share. How did we calculate this 80,000 share? It is 10 lakh rupees is the total amount which we need to give to the vendor, because this is the amount that is still left. Now 12.5 is the rupees per share that we are supposed to pay. So that means if you deduct it and write it in a proper way, it will come out to be 80,000 shares. So this is how the journal entry is shown. The building is of 12 lakh, cash payment is of 2 lakh, equity share is of 8 lakh, and the security premium comes out to be 2 lakh rupees. Now let's move on to the next question. There is a bills of receivable rupees 1,000 which was received from a debtor in full settlement of the claim of 1100 is dishonored. There was a bill of rupees 1,000 which was received from a debtor. Okay, we thought that this particular person will pay us after a certain period of time. 1,000 rupees was to be paid by him and it was settled at 1100 is dishonored. We expected that this particular person would give us the amount. He was supposed to pay 1100. He said, I'll pay 1,000. We agreed to that point even. It's okay that if that particular person pays us that particular amount only, right? And then it was basically dishonored. So if it was dishonored, that particular dishonor entry shall be passed in purchase return, bills receivable, purchase book, or journal proper. This is the question related to subsidiary books. There are overall 8 kinds of subsidiary books. What would be the answer in this case? The bills receivable, it is dishonored, so it will not be a part of the bill receivable book. This would be a trap if you take it just because there's a bill receivable word written in the question. In this particular answer, you should choose that particular area. Bill receivable book notes whatever bills are being accepted. Purchase return notes whatever the goods are being returned. We purchased them, we found them defective and we gave them away. Then is the purchaser's book, which talks about only the purchase of the goods. And the last one, that is journal proper. The journal proper talks about whatever is left, whatever transaction do not fit in the purchase book, sales book, purchase return, sales return, then bill receivable, bill payable, then purchase return and sales return book. See, I have taken names of 6 books, and that means we are left with the 7th and 8th, and these are all the books. Rather, the last 2 are cash book and last is the journal proper. Right, so these are all the 8 books that are prepared, and among them, when we have a bill receivable being dishonored, that means an asset is now being nullified because of some reason the particular person is not paying us. That means it will not be a part of cash book because nothing is received. It is not a part of bill receivable because that bill receivable is now cancelled. It is not even a bills payable because there is nothing that we are supposed to pay to the other person. Then it is neither purchase nor purchase return. So these 2 are also out of question. Then we have sales and sales return. Right? So that is also there. So this is among them, there is only one book which says anything which doesn't fit in any other book, I'll take it up. That's called journal book. Journal proper. It's called journal proper. This is a sub-C book which is called journal proper. That's why it's called journal proper. That means all the journal which do not find a place in any other book, I'll take it up. That's why it would go to that particular area. Right, now let's move on to the next point. There was a firm in the beginning of the year, they had an inventory of 15,000 rupees and ending finished goods inventory of rupees 20,000. This means the opening inventory was 15,000. Closing inventory was 20,000. And the cost of goods sold, they have given the goods which have already been consumed. COGS was rupees 80,000. Now they want to know what was the cost of goods manufactured. Okay. Now, when we talk about this area, what would be the answer? Will it be 80? Will it be 85? Or is it 75 or 65? In this case, we had opening inventory, we had closing inventory. What is missing is whatever goods we purchased during the year and then converted them into the area of the finished goods. So in this case, the correct answer would be 85,000. So how did we calculate it? All we need to do is, we were given the area of opening inventory, we were given the area of closing inventory. What was missing is what was purchased during the year and converted into what? It was converted into finished goods later on. So basically we had COGS, but that is equal to opening stock plus purchases minus closing stock. So when we do this kind of thing, we had 80,000 here is equal to the opening stock was 15,000 plus we have no clue about the purchases, but we know the closing stock was of 20,000. So now we'll take it from here towards this area. Since on one side of equal to it's positive, on the other side it will turn to be negative and this one will turn to be positive. So it would be 80,000 minus 15 plus 20. That gives us 85,000. So is it clear? This was the formula. If we talk about the goods that we have consumed during, there is a cost of goods sold. That means it is basically, if we had some opening goods, we purchased more, and from this, for example, if I got 10 units during the year, I got 20 more. At this point of time, I had total 30 units in my hand, right? So out of 30, I don't know what happened, but by the end of the day, I had only 5 units left. I was supposed to have 30. I have just 5 units left. That means 25 units are consumed. That's why they aren't there. That means in this case, the correct answer would be COGS is basically the cost of goods sold, the goods which are sold in the market and the goods manufactured. That means the goods which were purchased and then converted. This is the answer. Now, let's move on to the next question. This is from the accounting cycle again. The question says that the contra entries are passed only when. When do we pass the contra entries? When the double column cash book with bank and discount is prepared, 3-column cash book is prepared, simple cash book, or none of the above. Okay, when we talk about this area, the contra entries are passed only when. The contra entries are passed when we have both the cash as well as the bank as an element in terms of accounting. That means it is basically in the 3-column cash book or in the double column cash book. At this point of time, in the double column, they have given only bank and discount column. So this is not the one, because we need to have both cash as well as bank in order to make any entry known as the term contra entry. This term is used only for the cash as well as the bank balance. So where you find both of these, it would be termed as the contra entry. So it would be triple. It would be a triple column cash book. Now the next point that comes is the purchase of machinery on credit means. Next question says, if we have purchased a machinery on credit, it would mean that a decrease in an asset and increase in a liability, increase in an asset and increase in a liability, increase in asset and decrease in liability, and decrease in asset and decrease in a liability. I have purchased something. I've got a machinery. That means I have got a machinery, and right now what is happening is it's on credit basis, or it's on credit basis. That means what have I lost? It is machinery that is being purchased, and whatever we are losing here is we are losing nothing at the moment. No cash is given, but we need to note down the name of the vendor at least. I won't remember the name later on. So what I'll do, I'll note down the machinery on the debit side. This is for the journal. Debit what comes in? I've got a machinery. And debit the receiver, credit the giver. Vendor is the person who is given the machinery, and I'll have to make the payment to him later on. So in this case, the correct answer would be there is an increase in an asset, and here it is decrease, oh no, this is actually increase in liabilities. So both the things should be on the increasing side, that is B point, right? The correct answer is B point, when there's an increase in an asset and increase in a liability. Now let's talk about the next thing, that is in AS9 dash is the method of accounting which recognizes revenue in the statement of profit and loss only when the rendering of services under the contract is completed or substantially completed. Okay. In terms of revenue recognition, AS9 is revenue recognition method. When do we exactly go ahead and recognize our revenues? We determine that particular time when we'll recognize those revenues. So for that, what we'll do here is, will it be taken on the proportionate completion method or completed service method or revenue recognition or none of the above? None of the above is not there, because the correct answer here would be related to either, there are two methods in terms of revenue. Regarding the revenue, one is proportionate completion method and the second is completed service contract method. In this case, we are recording that particular transaction near completion. So it is completed service method. So the correct answer is B. Right? So now let's move on to the next question. The next question says, a company purchased a machinery for 1,80,000 and its consideration was issued at 20% premium. And what will be the face value of the shares issued? See, we have got 1,80,000 here. Right, we have got 1,80,000 as the value of the machine that we have purchased, divided by the issue of shares at 20% premium. We are giving it at a premium now. The premium is of 20%. That means if the particular share, if one share is of 10 rupees, basically we always consider the face value of share to be 10 rupees. So when we have a 10 rupee share, we are going to add 20% of the premium on it. The premium is of 20%, which makes that particular share value to 12 rupees, right? So that means we have 1,80,000 to be paid to some person where the value of each share is rupees 12. So in this case, the number of shares, in this case, what will be the face value of the shares? Now, I think the question requires a little different thing. In this case, what is exactly happening is number of shares required. This is number of shares required. This has to be number of shares required. So when we talk about the number of shares that are required, here it would be 1,80,000 divided by 12. That will give you 15. Right? So that is what we need to do. That is 15,000 shares. Okay. Now the question can be taken in this way as well. The question is correct. It's more about the area of knowing what exactly the question is asking us. The question is basically asking us what is the face value of the shares issued. You and I now know that if 1,80,000 was to be paid to someone and each share is of rupees 10, we are giving it at 2 rupees extra. That means we are going to give each and every share at 2 rupees extra. That means 1,18,000, 1,80,000 divided by 12. 15,000 shares are given to someone now. The numbers of shares that we are supposed to give to the other person is 15,000. And they've asked only for the face value of the shares. Nothing else, only the face value. They do not want to know the value of premium. So let's keep it like each and every share costs rupees 10. That means it would be taken as 1,50,000. Right? This would be the answer in this case. Now moving on. This is the end of the session. I hope it turned out to be helpful for you. If you are able to get through these accounting questions, then what you can do is check out our Officers Adda channel for on a regular basis. I'll be there in the morning at 7:30. Along with this, you can also check out our AFB batch, which has just started on 16th of August. The timing for this batch is 8 a.m. and if you find this particular batch or the classes that we are dealing with helpful for you, all you can do is kindly go on to our website Adda 24/7 and click on the area of Adda 24/7. Here you will find the batch in terms of JAIIB. This is area of in terms of JAIIB, you will find this particular batch, and November, December English batch which has already begun. You will find this particular batch over here, and here you can find the area of complete batch which includes all PPB, AFB and LRB. There all the faculty, you can find all the details of the faculties that are teaching here. You will get over 67 ebooks, you will get around 73 test series and 120 hours of classes. The classes are all live and you can find the timings of each and every class here. There is on one LRB class in the morning as well as the AFB class, and then the further details are also given. This is for the batch which is starting on September 12. One batch has already started. This is for the next batch that is coming up, that is on September 12. So if you haven't gone through our portal yet, then that means you still have time. You can check it out and you can enroll yourself for the September 12 batch which would be starting, and the batch would be stated as follows. PPB on 12th September, AFB and LRB would be starting on 19th of September. The study plans are also given, so you can also review all the study plans. All the 3 subjects are clearly stated. Whatever the subjects would be and taken by all the teachers, they are also specified. So these are the areas where you can look forward to, and all you need to do is you need to come here, click on the area of buy now, and once you click on the area of buy now, write Y 541 and apply it. Once you will apply it, you will find 3679.77, and if you are using the app, then there would be a further discount of 1% as well. So it can go up to 78%. So what are we waiting for? If you're preparing for JAIIB examination and you would like to prepare in a better way for the English medium, then what you can do is you can check out our app for further details. Kindly go ahead and use the code Y541 to avail the discount of 77%. And if you're looking forward to ebooks, they're also available at this point of time. Then all the details of the offers would be available on our website. So kindly check it out, either the app or the website for further details. And stay tuned. We'll be meeting again in the next class at 7:30 a.m. Tuesday, Wednesday and Thursday. Thank you.